All right, so today we're taking a deep dive into the world of private equity
Private equity, yeah.
with Apollo Global Management.
Really fascinating stuff.
Yeah, their 2022 and 2023 financial reports.
Hmm.
They actually give us a pretty cool look into how these big players operate
Yeah.
and how they actually,
Yeah.
make money.
The big question, right?
Right.
Everyone wants to know.
So are you ready to unlock some of these secrets?
Let's unlock them. These reports can seem a little intimidating at first glance.
Oh, yeah,
All the financial jargon.
definitely.
But once you learn how to read them,
Right.
it's a pretty compelling story.
Absolutely. Okay.
Yeah.
So the reports break down Apollo's business into three main segments:
Okay.
asset management,
Uh-huh.
retirement services,
Mhm.
and principal investing. Kind of like a three-legged stool,
I like that.
each one supporting the others.
Yeah.
So let's start with asset management.
All right, so asset management, that's probably what most people think of when they hear Apollo.
Right.
They're managing investments for like really big institutions,
Amen.
pension funds.
Like what kinds of investments are we talking about here?
So think like credit,
Okay.
private equity,
Right.
real estate, you name it.
So they're like financial coaches for these institutions,
Yeah, you could say that.
helping them navigate the complexities of the market.
Exactly. They create these investment strategies aiming for those big returns.
Gotcha. So then there's the retirement services.
Right. Retirement services, this is more about like annuities,
Okay.
primarily for individuals and institutions.
So like helping people plan for their golden years.
Exactly.
I'm guessing this must tie into their investment expertise somehow.
Absolutely. What's really interesting is that Apollo actually manages investments for its own retirement services business.
Wait, really?
Yeah, they're investing those retirement funds in their alternative assets.
So they're basically investing in themselves.
In a way, yeah, you could say that.
That's fascinating. How does that benefit them?
Well, it allows them to really leverage their expertise in alternative assets.
Okay.
Things like private equity, real estate infrastructure.
And these alternative assets, they don't behave like traditional stocks and bonds, right?
Exactly. They're different.
Higher potential returns.
Right, but also
But riskier, I imagine.
more complex for sure.
So it's a strategic move on their part.
Absolutely. They're playing a long game.
Okay, so that's asset management and retirement services.
Right.
What about that third leg of the stool, principal investing?
So principal investing, that's where Apollo uses its own money, its capital to invest.
Oh, okay, so they're not just managing other people's money.
No, they're putting their skin in the game.
I like that skin in the game.
It aligns their interests with their clients.
Makes sense. But with three distinct business lines, how do they make sure it all works together smoothly?
That's where their integrated platform comes in.
Integrated platform.
Yeah, it's all about collaboration and information sharing across all the segments.
So like a brain trust.
Exactly. They've got experts from different areas all working together.
Interesting.
It's a smart approach.
Yeah, it seems like it would give them a real edge in the financial world.
Absolutely.
So we've talked about their different business segments.
Yeah, all the different moving parts.
But let's get down to the nitty-gritty.
Money.
Exactly.
Yeah.
How does Apollo actually generate revenue from all of this activity?
Well, it's not just one thing.
Okay.
It's a mix of different revenue streams.
So like a diversified portfolio, but for income.
Exactly.
Okay, I like it. So what are the main ingredients in this revenue mix?
The reports break it down into categories like management fees,
Okay.
performance allocations,
Hmm.
and incentive fees.
So it's like a financial buffet.
I like that analogy.
They get to pick and choose what they want to eat.
No way. Yeah.
So walk me through this menu. What are management fees exactly?
So management fees, those are the most straightforward.
Okay.
Basically, they're recurring fees that Apollo charges just for managing their clients' money.
Right, so like a subscription fee.
Exactly.
You pay them to manage your investments, and they take a cut.
It's a percentage of the assets they manage.
So that provides a steady stream of income for them.
Exactly, a stable base.
But I'm guessing the real excitement comes from those performance-based fees,
You got it.
the performance allocations and incentive fees.
Those are tied directly to how well their investments perform.
So the better they do for their clients, the more they make themselves.
Precisely. It's a win-win situation, ideally.
High risk, high reward.
That's the name of the game in private equity.
Absolutely.
Mm.
So how are these performance targets determined?
Well, it's not just about hitting a random number.
Okay.
They have specific benchmarks and fee structures in place.
Can you give us an example?
Sure. So let's say you invest in one of Apollo's private equity funds. Apollo doesn't start earning those performance allocations until the fund hits a certain return.
So they have to clear a hurdle first.
Exactly. It's called the hurdle rate.
Makes sense. It's
Yeah,
like a minimum rate of return before they can get their share.
exactly. Once they clear that hurdle, then they get a piece of the profits above that.
Okay, so that definitely incentivizes them to aim high.
Sure.
But let's face it, no investment is without risk.
True that.
And these reports don't shy away from the challenges.
Nope. They're upfront about the risks.
We've got market volatility, interest rate changes, regulatory shifts, even cybersecurity threats.
That's a long list.
It's a lot to navigate.
Definitely. And it's all interconnected.
Right, like one thing can affect another.
Exactly.
The reports specifically talk about interest rate risk, how that could impact their retirement services business.
Right. If interest rates shoot up.
It could become a lot more expensive for them to manage those annuities.
Exactly. And that would cut into their profits.
So even though they're a huge company,
Yeah.
they're not immune to these external pressures.
Nobody is.
It's like they're sailing in uncharted waters,
I like that analogy.
constantly having to adjust course.
Exactly. You have to be adaptable in this business.
Speaking of adapting, one thing that caught my eye was Apollo's significant investments in companies that aren't publicly traded.
Ah, yes. They're private market investment.
They have a big chunk of their portfolio in that space.
They do. It's a different kind of risk.
Riskier,
It's not necessarily riskier, but it's less liquid.
meaning,
It's harder to cash out quickly if they need to.
because you can't just sell those shares on the open market.
Exactly.
So there's a trade-off.
Always.
Higher potential returns, but less flexibility.
You got it.
It's a balancing act.
It's all about finding the right balance for their overall strategy.
It's fascinating, isn't it?
Mhm.
It's like they're playing this high-stakes game of chess with their investments.
Yeah, constantly having to think several moves ahead.
Exactly.
Yeah.
But I feel like after really digging into these reports, we have a much clearer understanding of how they operate.
Absolutely. We've really peeled back the layers.
Right. So for someone trying to wrap their head around Apollo Global Management, how they actually make money, what are the key takeaways?
Well, the biggest thing to remember is that Apollo is a performance-driven machine.
Okay.
Their entire business model hinges on generating those above-target returns.
Those impressive returns we were talking about earlier.
Right, and it all ties back to those performance-based incentives.
Right. The performance allocations, the incentive fees.
That's where they really make their money.
But it's not just about chasing the highest possible return, right?
Absolutely not. They have to manage risk across all those different business segments.
Right. Navigating all those challenges we discussed.
Market volatility, regulatory changes, cybersecurity threats, the list goes on.
It's a lot to juggle.
It is, and they have to be ready to adapt.
That's key in any business, really, but especially in finance.
Absolutely.
So we've got this picture of Apollo as this powerhouse,
Right.
but they're not invincible.
Not at all.
Right.
These reports show us where they stand today, but there's no guarantee what the future holds.
Right. Past performance is never a guarantee of future success.
Exactly. It's all about constantly evolving and adapting to the ever-changing market.
Well said. So one final thought to leave our listeners with. The reports highlight Apollo's use of debt in their investments.
Ah, yes, leverage.
Right. It's a key part of their strategy.
It can amplify returns, but it also magnifies risk.
A double-edged sword.
Precisely.
So as we wrap up our deep dive into Apollo Global Management,
A fascinating deep dive.
it's clear that they've built a sophisticated and complex operation.
Absolutely.
And while we've uncovered some of the secrets behind their success,
But there's always more to learn.
there always is. So until next time, keep exploring, keep asking questions, and keep diving deep.
And always remember, the market is always moving.
Truer words have never been spoken.
Hey.